Well, welcome back to our podcast. Today is Monday. Monday's the day after Sunday. What makes this Monday more special is the 49er win over the Cowboys. What do you think, Jamil?
It's Victory Monday, everybody, and we're so happy that the Niners won. They pulled it out, and the second half was amazing, especially the third quarter. What a game.
It was an amazing game.
We beat the Cowboys. We beat the Cowboys again.
Yes. If you're a Cowboys fan, nothing against you, but we're Niner fans. This is Niner country. Anyway, we have 3 questions we're going to dive into. These were questions that were asked by people that listen to our podcast, and they want to know. One of the things that people kept saying, listen, I am waiting till after the elections to see what happens to make a decision on purchasing. What do you have to say about that, Jamil?
Well, after the election, people are thinking that a certain candidate will win. And I think that that's not so true. I think that if any candidate wins, the Federal Reserve will cut interest rates. Inflation is getting better and rates will be cut. But I think if people are waiting for that, they might be missing out on an opportunity right now where everyone is on the sideline and they could be making an offer on the house now at a good price.
Well, here's one thing we're seeing in the market. We're seeing price cuts because people are waiting. It's creating a really good buyer's market right now. So if you're on the fence, don't wait. Like we always say, marry
the house, date the rate.
And date the rate. All right. On to our next question. Why did interest rates go down as much when the Feds cut their rate? And one of the misconceptions and what people don't understand, that when the Feds cut the rate, they cut the short-term interest rate. Usually when they say they're cutting the rate, mortgage rates come down from the smell of them cutting the rate. But what it affects right away is your credit cards, your car loans, your home equity lines of credit. That's what the Fed's cut rate affects. But how does the mortgage rates get affected? What affects the mortgage rates to come down, Jamil?
So there's many factors that affect mortgage rates to come down. First thing is when they know that the rates are coming down, interest rates start coming down before the Federal Reserve cuts the rates. But the biggest factor is the 10-year Treasury bond and also mortgage-backed securities. Mortgage-backed securities are securities held by lenders, and they sell off their loans to other lenders and they free up the money. When they have more money, they can offer more competitive interest rates, followed by stock market, global conditions, and many other factors that rates are looking at. So that's what's really behind the interest rates.
That's what's behind the mortgage rates coming down. So it's a little bit different than when the Feds cuts the rate. Just remember, when the Feds do it, short-term rates get affected right away with your car loans, credit cards, and your equity line of credit. Now, we have a question that someone sent in that says, how do we know when the Feds are about to cut rates? How do we predict that? How do they decide that? What is the Feds, what's in their mind when they say, okay, we're cutting rates?
Well, they're looking at inflation. They're looking at the economy. They're looking at the economy growth. They're looking at jobs. All these things are factors whether or not they cut the interest rates.
Well, I hope we can answer more questions for you in the future that you have. If you have any questions, please comment below, send them in, private message us. We would love to tackle any question that you have concerning finance or real estate, because we know that there's decisions to be made, and the more informed you are, the more likely to make the right decision. Thank you for watching.
Have a great day.
Thank you.